So again, good evening everyone and welcome to session recap. And today we will see 5 different setups, of course, and you might ask me about other pairs or equities. And well, we had a good week behind us. Some trades went in profit, some trades were, unfortunately, we had some stop loss also on pound dollar, but eventually a revised trade on pound dollar gave us additional pips. Well, it happens sometimes, and of course I think that dollar yen was indeed the trade of the week because it was an easy breakout trade from a setup on session recap. So before we begin, first we go with risk disclaimer, explaining that online educational materials are developed by Admiral Markets Estonia for a global audience. So Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion, and the webinar is for informational and educational purposes only. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And finally, we go with past week results. Well, euro dollar positional trade was either 20 pips, break even, or minus 40, depending on how you traded. I actually made a tweet and posted on Twitter when euro dollar was on break even, but then after that it went 20 pips in profit and then it dropped. So depending on what you traded, whether you held this setup or not, well, it could have been trifold. So I ended up with break even, but some people reported that they have actually made 20 pips. Pound dollar minus 30 was positional trade, revised setup was plus 50. Australian dollar positional trade was good for 45 pips. Dollar yen breakout trade was good for 50 pips. And New Zealand alternative trade was 20 pip. Then we had news and breakout for another 25 pips. So total pips pool was either 70 or 210. That was the maximum available number. Trade of the week for me, in my opinion, was definitely dollar yen. Before I show you what happened during previous week, again guys, it's very important that you understand the rules, okay? Because I still see that some people simply they don't understand the rules. First of all, you need to give price a breathing room, okay? And you can enter within 15 pips of the predicted level if it's in agreement with your system. These zones are those zones are named by POC zones, point of confluence, or buffer zones. Use scaling in if you wish, okay, and you do your own trade and money management. So whether you will scale out, close it for 20, 30, 50 pips, whatever you do, guys, you do your own trade and money management. What I can suggest is that when you are in profit, let's say you made some substantial number of pips and you see that it might go still up but it might also turn, then you can just scale out, put the rest to break even and enjoy a free ride. Add the spread to your stop loss. Even if you trade via ECN, add 2 to 5 pips spread depending on the pair traded. Also, we take one position per listed pair, so we either take positional or alternative trade, whichever hits first. The only exception is if you see a breakout trade or scalp trade, then you can make another trade based on either breakout or scalp setup. But if we see only positional or trend trade, we take only one per listed pair. First touch of the zone is the most profitable, okay? So remember, this is where many traders make mistakes. I am not saying that second, third, or fourth touch of the zone cannot be profitable, but usually that first entry in the zone, the first rejection in the zone is usually most profitable. Breakout trades are another setup that we can do with scalp trades if we see yen is set up for breakout. Depending on time and volatility, we use profit stop after 20 pips. The only exception is that, well, if we see that pairs are not making more than 20, 25, they start to reverse because of some news or events, well, then you might actually get another, you might get 20 pips and then close your trade. But usually I don't recommend taking less than 20 pips. Session recap setups are valid for today, tomorrow, and sometimes the day after tomorrow. Pay attention to Twitter updates because, well, you will see again when I made a revised pound-dollar analysis, because I was sure that it will go up, but unfortunately we had a so-called stop grabber pattern. Scalp trades should be done at or very close to important support resistance levels. All those levels and trades are calculated by historical levels and Camarilla. Add these levels to your system. Pay attention to trend, because when we miss a positional trade, well, we still can get into another trade by using some, let's say, lower time frames, or you can use your own systems, but follow the trend. That is very important, unless alternative trade is hit, because alternative trade is usually counter trend trade. Pips pool is the maximum available number of pips you could have got on recap entries. Okay, for previous week, euro dollar was ranging. We had a buy position around 1.0690 with a stop loss of 1.0650. TP was 0.750. What happened? This vertical line shows the webinar when this is the webinar time. So you can see here it's our webinar time. So after the webinar, the price went down. Okay, it hit 0.690, but you see, that is why I said on Twitter it's important to respect your stop loss, because price dropped, but it never hit stop loss. Okay, and then it went to break even, above break even. Okay, then went again and there. But if you went long around 0.690, at least you could make 20 pips. Okay, so some people said that they actually went here. I mean, I cannot count that into session recap overview, because, well, I know some people, I saw a tweet from a trader who entered here. I mean, he entered like 10 pips from stop loss, and he made, well, he actually made almost 60 pips. But our entry was around this zone. So at least we could place this on break even. Pound dollar, I said it was in uptrend. Well, I was right, definitely. But guys, this is so-called stop grabber pattern. You see what happened. My stop loss was 23.70. I had spread, a little bit of spread, so that is like 23.65, 6. What happened is, watch this. The pair went down, grabbed all the stops below it, then closed, then tried to grab another stop, and when it finally, these are bullish buyers, guys, here. These are very, very bullish. This is bullish pattern when you see it. It can be counted as quadruple bottom, because you see there is a leg, another big leg, another big leg. So all these pin bars, pin rejections signify strong buying from that spot. And what happened afterward? Watch this. Well, unfortunately, our setup from session recap got stopped because of stop grabber pattern. Some people ask me, what is a stop grabber? Stop grabber is a special pattern that appears usually when market wants to make a big move. Here, this example is this is a representative of a stop grabber pattern. The pair went down, and let's say that a lot of stop orders have been, stop loss orders have been placed around this level. So when pair broke through 24.00 to the downside, it collected all stops below it, okay, here, and every single close of a buy position that was stopped out is automatic sell into the market. That is what your platform does in the background. So what happened is all these weaker stops have been collected, and then the pair went to the upside. So you see, that is the power of stop grabber. It can trick traders. It can trick traders into thinking that the pair will reverse. And unfortunately, newbie traders start selling here, and they're caught in a bad spiral that usually, well, brings to another stop loss. So that is why I always suggest being very, very careful if you deal with stop grabber patterns, if you deal with some things that are actually out of your scope. Simply, well, the question is, stop grabber the manipulation of big players? I cannot say it's manipulation of big players. Simply said, you will see news, right? And on bad news report from pound dollar, it can actually, investors start selling pound versus dollars, and they dump pounds. So basically, when it comes to a certain level, stops will be hit, and then the pair will proceed in its normal direction. This might look like a profit taking, but it's not an actual form of profit taking, because this looks like it's not profit taking. This is selling, guys. This is pure selling. So sometimes banks can do that, or institutional traders can intentionally spike the price to opposite side, tricking other retail traders into thinking that the pair will reverse. But the thing is, this what happened with pound was, I think this was news-driven move, and actually what I remember, we had some, was it something like Chinese data or some data that actually moved equities a lot during Asian market. So I think this happened during pre-London session, and then during London session it spiked to the upside. I mean, for me it was very clear that the pair should go to the upside. And then after this, well, I did a revised analysis. The analysis was, of course, the London Markets website here, and you see it was clear. We had a master candle breakout. We just waited for this region, for this zone to break so we can actually buy. And what happened here, we had a buy trade, okay, and then you know what happened. We had like 60 pips of a profit after this setup, because master candle breakout was very, very successful. And this is what happened. The price even hit H4 around this zone, and then it dropped, but that was a breakout opportunity. So you could have made some nice pips on revised analysis, okay, on revised analysis for pound dollar, okay. Okay, so another pair that went how we expected, well, it was Australian dollar, although it, I said be careful because of cash rate announcement. But what happened with Australian dollar? Well, this was the time of the webinar, and then after webinar we had a buy setup triggering at this point. So cash rate announcement, actually it went as we presumed, and I was very happy to see it. I didn't trade it, but it really proves the power of technical analysis. It came within the scope of our POC zone, and then watch this, it spiked heavily to the upside, so it was very good to trade. And if you actually traded the setup from this zone here, you could have made nice amounts of pips, really. Although it was, of course, risky, but if you want to trade risky events, you should always lower your risk. That is the primary prerequisite of trading during important events. You need to lower your risk. Then the setup that I really enjoyed and I traded it, it was dollar yen, breakout sell. I was very clear saying that if 112.00 breaks, okay, the pair should target this level or zone. Well, it happened. After a breakout sell, the pair went 45 pips, 40 pips in profit, okay, and then actually spiked, and then it was another breakout. So we had like two breakouts on dollar yen, but well, we traded this first breakout, and you see here this is momentum candle. Momentum candle dropped below 112.00, collected all stops here, okay, and then it started to reverse. Then we had another sell, and finally it was bought. So as long as 112 holds, I think dollar yen is bullish, but I have of course setups for you today that I will show you. But let's say that dollar yen was the trade that I really enjoyed. It was like a no-brainer trade where when I saw 112 breaking to the downside, well, it was very, very, very easy to trade because the setup was really, really a no-brainer setup. New Zealand dollar, again, guys, I said, well, that was news, of course, that spiked New Zealand to the upside, but before the news, you see here 73.25. I said sell around 73.30. The pair was sold here. Then it went 30 pips in profit, 25 pips, and just before the news. So if you traded this before the news, you should have made profits here. Then I said if 73.55 breaks, we should get a long trade. After the news, it was also for people who want to trade the news, who traded on news. This was a good setup because the price went above 73.55 and it hit 73.75 before it reversed. But it was a tricky setup, of course, because of stop loss that was huge. So if you traded it, it was risky. I didn't take the trade, but well, you see 73.55. Simply said, this was too big of a candle for me to take a breakout setup. Mario is saying he traded from the top of New Zealand dollar. Well, excellent, Mario, if you took the trade here, of course. But this was, as I said, this could have been a good breakout buy, and originally it was if you traded it. But for me, it was a bit of risky simply because this candle is way too big. This is Marubozu candle, but it's huge, guys. This is huge. So again, we had a successful week before us, and now we want to trade what we see in this week. The market started slow this week, but I hope that it will turn to be much faster. Market is waiting for some news events, so we need to be ready for additional volatility this week. If you want to know what are the most important fundamental elements this week, then you can go to analytics, fundamental analysis here, okay, and here your weekly fundamental view, okay. These are some important events that will be triggered this week. Of course, Chief Janet Yellen will speak, so we might see volatility on euro. But as I said for the previous week, yen pairs will be very volatile, and of course you always need to pay attention to what we have to say here. Chris and I usually write about events. Here you can also see before, for a prior week starting from February 6th, I said, well, the main focus of this week is on Asia Pacific crosses, and that actually happened because New Zealand, yen, Australian dollar really showed huge movement because news was actually favoring Asia Pacific crosses, really. Okay, so let's see setups for this week. Okay, this is the first setup. For me, euro dollar is sell there and buy here. The price is very slow now. Okay, and what I'm also paying attention to, guys, this is what I'm paying attention. If we see a daily close below 0600 or 4-hour close, I would now go with daily close because in 5 hours and 30 minutes or in 4 hours and in 30 minutes we will see a daily close. So if we see a daily close below 0600, then I might say that we could possibly see a sell from 1.0640, and I will sell on rallies. So for me, it's very important. I mean, if I want to sell now or in a near future, I want to see a daily close below 06, and then on lower time frames, when we see retracement, we might get into a nice positional sell trade. So if we see a daily sell, a daily close below 0600, then I would say that we might actually okay, let's see, where is euro dollar here. You see, I think this will be sell on rallies. How it looks at the moment, guys, I think it will be sell on rallies. This is uptrend, but guys, uptrend, trend line, you have this trend line that has been broken, okay, but more than enough, we have another trend line, okay, here, that actually caps euro dollar now. Okay, so if we see a daily close below 0600, I will sell on rallies, and I really will do that. I mean, I will drop down to lower time frames. For me, good place to sell is 0640 if we see a daily close below 06. So on a rally, next rally, you open up 1 hour time frame and watch reactions around this zone. 1 hour time frame is here. You see, guys, if we see a daily close below 0600, next rally, okay, next rally could get us here. We have an order block that is strong. It was triple bottom here, guys. Okay, so this is very strong. We have ATR pivot, probably it will be recalculated again. Then we might say that EMA 89 is going towards it. It will be kept below, so I think 0640 could probably see some nice rejections. Otherwise, I would look to sell around 0670 with a stop loss of 0715 with a target around 0600, okay, and buy trade could happen around 0520. Well, if you go to 4 hour time frame, you will see that 0520 has a confluence here around 0520. You see a lot of buyers here, another set of buyers there, okay, and also what you can see here is confluence with L4 short. And if you make now a Fibonacci from this part to this part here, you will see that L4 is actually 61.8. So well, there are some reasons that I would buy, probably, at least for a scalp swing trade, because it's alternative setup around 75.20, 30. I will look into this and buy for a possible rejection. So whichever hits first, okay, whichever hits first, we need to see. This is euro dollar setup, okay, so let's see. Pound dollar, ranging mode, buy around 23.60, stop loss 23.20, okay, and TP is 25.50, sell is 26.10, the stop loss 26.50, TP 2500. Pound dollar is a little bit better mover than euro dollar, but it's still ATR. Let's use 14 ATR. Okay, 14. 120. You see, it's much better movement for pound dollar than it was for euro dollar. But still, guys, I think that pound dollar can be traded both ways. Uptrend has lost something from its strength, but it still can be traded both ways. Okay, so pound dollar 4-hour chart is saying that the pair is still bottom dips, but I would really like to see it a bit lower. This is what I really cannot conclude anything of. Watch this, guys. These rejections, okay, it tells us that it might go down, but simply I want to see something more substantial than this. So if I want to sell, for me it's already sold, right? So I cannot jump in a trade now because it started to sell 30 pips above. So what I would like to see, probably on the next break it might go up. So for me, I would like really to see it a little bit higher, around 26.10. So this is where I would like to see it. It's very close to H4. It's ATR projection, and if it gets there, it will start to be to look like some sort of bearish head and shoulders, except for this. So it might go down. So I would still rather wait. We can make a Fibonacci here from this spot to this spot, from left to right, from past to present, and you will see that actually you see 26, 27. Well, this is resistance, so we might see a drop from 26.10 zone. 26.10, 26.15, 20, 26.05, all the whole zone is good to short, in my opinion. But in order for pound dollar to really to reject, it needs to break this trend line first and H3 confluence, then it might go to the upside. So this is what we are waiting for, and of course buy position 2360. Historical buyers here, a lot of historical buyers. So I expect this to be bought again. Okay, see here, we simply, if we buy it, we don't want pound to break this 2316. So if you go long here, this should be protected. It's an order block here, but this is really a big way. We still has almost 200 pips, not 200 literally, but it has 150 pips to drop for us to buy. So I would really like to see a sell trade first. Okay, sell trigger. Now we go to Australian dollar. Australian dollar, we have Chinese data, guys, tonight, so be very careful. Australian dollar is really heavily moved by Chinese data. Okay, so you might be very careful if you want to take this trade opportunity. I definitely would advise lower risk if you want to trade it. We had a position buy around 75.90, stop is 75.60, TP 77.20, TP2 is 77.50, sell is 77.50, stop 77.80, 76.50 is TP. So Chinese data, be careful about it, okay? And definitely if you trade Australian dollar, try to trade with a low risk. It's in uptrend, as we can see here, but there is some consolidation. This consolidation is called a rectangle consolidation, and it's usually it happens when markets are waiting for something. I would sell much higher than this, and I would buy I might buy here because we have a L5, EMA 89, order block here, rectangle bottom here. So here, you see this is rectangle consolidation. And as I say, for me, you should be able to see the screen now. Here, Australian dollar, so you see rectangle consolidation. Up, down, but watch these guys. Order block here, you can actually raise it. EMA 89, ATR projection low. So for buy trades, because it's in uptrend still, around 75.90 is good here, this zone. But for sell trade, around 77.50 is good. So we need to be patient with these setups. We first need to either see a drop or spike. If it spikes 77.50, let me mark it here, 77.50. A lot of selling in the history. You see huge selling, almost 700 pips, 600 pips. So see, I think that this level, I have a pending order there, so let's see if it happens. But it's very, very good to be sold into, in my opinion, really. So let's see what if we see any retracement to the short side so we can long, or to the long side so we can short, whichever hits first. Dollar yen, again, different setups with dollar yen. I already did the analysis with dollar yen. I have a pending order. My pending order is sell 130.40 because that is a common gap that I think, in my opinion, it can be traded. The analysis was provided to Forex Empire, okay, early morning, and I actually tweet about it, so I'm sure that you saw it. Okay, so let me show you. Okay, this was the dollar yen analysis. People ask me why it's called common gap. Simply because, okay, I still need to take my own picture here. Wait, my own chart. This cannot be zoomed. Let's see. Okay, I think I have a screenshot. Just give me a few seconds, guys. Okay, give me a few seconds and I will open the screen. I just want to make sure that I have the correct screenshot. Okay, dollar yen. This was it. Dollar yen early morning. So I want to see, either I would like to see the break here. So the gap can be closed. So below 130.40, we might see a gap close. But having in mind that dollar yen is in uptrend now, you see, I also said that it might spike from this zone. So, okay. So I hope that you actually followed this analysis. And setups are very clear. A buy around 112.55, 65, stop loss 112. Risk is 1.5%. So if you take this trade, guys, it's like 65 pips of stop loss, let's say. You need to risk 1.5% into this 65 pip stop loss. I don't recommend risking more than 1.5%. TP is 113.90. Buy trade might happen again at 113. Wait. Just give me a second to see if that is correct. It's already happening. Okay. It's already happening, so this is not valid anymore. I will delete it because it's already happening, guys. Okay, I will delete this after. So, well, I took some long breakout today on dollar yen. It was a scalp trade, but I forgot that it should actually be removed from the PPT because it's already happening. But it was very clear, I mean, that if this breaks, it could go to 114. So sell position is 114.70. Here we have a stop loss of 35 pips plus 3 to 4 pips to cover for spreads and commissions, and 114.10 is TP. Yes, when you place a stop loss, always add a couple of pips, no matter if you trade via ECN or in a standard account, add a couple of pips or cover the spread. So if you trade with a pair that has 4 pips spread, add 5 pips to your stop loss. You need to count the spread always for the stop loss. 114.10 is TP. So let's see now. Dollar yen, I will go to 1 hour chart. Switch this to daily. You see here, it will be heavily overshot above H5 and above its ATR projection. Place a line here, go to 4 hour, see. So this could be a good place to short. It will follow this trend line. Still it will follow it here. But if it's rejected, then it will be like this. So it will be 3 touch trend line. Let's say 2 touch because this can be counted as the single touch. So this is my selling spot, really. Even if I place a Fibonacci retracement, see, 78.6. So 114.70 is sell trade, but if it doesn't happen, 113.40 is breakout trade for the gap close towards 113.20. Okay, and only buy position for me is valid here. 1 hour time frame is long, so here, because this is, you see, this was consolidation. So if this level is tested, I think it could spike to the upside. We can also place Fibonacci retracement for a long trade, and you see here, guys, it's L5, 78.6 to the long side. So this is the setup. A lot of setups for dollar yen. And finally, euro yen. Now, if you followed my analysis today, again, euro yen, I did it with Admiral on website. And here, technical analysis, euro yen, trapped in consolidation pattern here. What happened after the analysis? The pair went there, it didn't hit POC, it went to 121.06, 9 points from POC. So if you were watching my analysis, maybe you shorted it there, so you could make some pips again. And I still think it might reverse if it gets there. So 121.30 for me is, let me just remove this. here. So 121.30 guys, see here the top of this range. M pattern, if you traded M pattern, you should be in profit now. Okay, I hope that you took M pattern that I showed you. Okay, at least you could have made 50 pips. Watch what it says. Break of 120.70, targets 120.45. Well, that is M pattern. I didn't make it up. This is it. So you could have made some pips. Okay. You need to be aware, guys, of these various patterns. I mean, for some people it could mean nothing, 15 pips, but I think it's definitely good, especially when you have such a small range. You see only 70 pip ATR for today. So in my opinion, even taking the profit now for 12 pips, it's still good, because guys, I mean, the price is very slow and now it's end of day trading. So definitely M pattern went as expected. So guys, that was all from me. If you have any questions, guys, ask me. I will roll the slides. And I still have some time to explain additional setups. Well, as I say, guys, sometimes taking 10, 15 pips from the analysis during the day is still good if the pairs are very, very slow. Okay, I will now roll slides, and then I will answer your questions. Australian dollar, dollar yen. Neglect this setup. This is already happening. And euro yen. I mean, this is also happening from, it's happening from today analysis, guys. Marco, position sell is valid, but breakout sell is happening. So 120.70, you should take profit now. If you are in this trade, take profit, because it's happening. You see, it happened after the analysis on euro yen. Okay, let's try to answer a lot of questions, guys. Really a lot of questions, so I will try to answer most of those. Should you scalp on 5-minute chart for all alternative trades? Naveen, it doesn't matter. You don't need to open 5-minute time frame. The primary purpose of this is the zone. As I said in the beginning, here is the zone. So this is the zone. So you don't need to lower and drop to you don't need to drop to lower time frames, because what matters is the zone. This is what matters. 2360, so 2350 to 70, roughly that is the zone. 2610, roughly 12590, sorry, 26 to, let's say, 2620. But sometimes you will see that it's very close to this, 3, 4, 5 pips. Then enter with 0, let's say with 1/3 of a trade, and if it drops, just add 2 more thirds. You need to know how to manage your trade. So it doesn't matter the time frame, really. The zone is what matters, the price. That is Camarilla Magdi. Dollar CAD. Dollar CAD now looks like it wants to break below this order block. So what I would pay attention to, 1 hour or 4 hour close below this order block, it could spike, it could tank the price down. To me, this looks like it's being sold on rallies, but have in mind that now these are supports. This is order block, so you still need to be careful. You see it's M also, so it might go down. And short could be initiated from this position here. This looks like a possible short here. Confluence, we have a lot of confluence there. But also pay attention to close below. Buying could happen definitely. It could happen within 30010 towards 330. So this is the zone to be looking for buying opportunities if the pair drops. Please take a look at pound Australian dollar. Pound Australian dollar, this is huge rectangle here, and I don't recommend trading it. There was a fake out here, then the pair dropped. Watch this, guys, huge triangle, huge, not triangle but rectangle. It looks like it's in a slight uptrend, but very slight. I don't have any particular opinion about this. When I see this, for me it's non-tradable. Also, this could be like some form of, this is left head, right shoulder, this here, head and shoulders, that already played out. But if it gets there and if it's rejected again, then it could be a start of something big on this pair. I really don't have any particular opinion now at this point. It's not tradable for me. Goran is asking for Brent, for crude, WTI crude. Okay. It's going up and up, but well, this is definitely support. If this is broken, you see it respects ATR. If it breaks to the downside, then watch for L5. This could be bought here because it has an order block and also its support. So this is main play at this point, but watch for buy trades here or maybe even from this point. Walter, he's asking about daily, dollar CAD daily for Wolf Wave. Let's see if I have it here. Dollar CAD daily. Wait, I need to find now dollar CAD daily chart. Okay. Wait, just give me a few seconds. I will be right there. Wait, guys, just give me a few seconds, please. I need to set up the chart. Well, you see on daily time frame, we have some waves already happening here. Forget about these arrows, not important. On a daily time frame, we had, this was a buy breakout on Wolf Wave. So 1, 2, 3, 4, 5. 1 to 3 line, 2 line. This is not strict Wolf Wave, but actually breakout happened here. This candle went below and then back above. So this was the signal on a daily time frame, Walter. It still has, you see, 160 pips, but it's daily time frame. So actually this, you see that this is at a line, but it can change a lot because it started to go down now at this point. So wolf wave was initiated here, or you could have actually gone long here. You could have gone long here also. See? Because you need to see a break and inside close, or actually if the 1 to 3 line is here, you need to go with breakout. So how do we calculate breakout here? The price went below, then back above 1 to 3 line. So that is how I do it, okay? That is how I do it. And breakout was actually, it happened here, and you see, I'm not sure that it will get there, but it's already happening. Ro is asking, last week before the master candle setup, there was one more master candle setup to the downside, but price didn't go down. How does it qualify to be a master candle setup? You need to watch my recording. I will show you the link now for price action training school. It has a master candle webinar uploaded. Okay, let's see if here the name is, okay, I will just change the name, but here, this is it. The last recording here, it says POC zones, but it's actually master candle. I will actually rename the title here, but you will learn about master candles there, okay? Yes, row, so this is it. It doesn't matter. We will correct this. This is a typo, so you see, it's recorded. Euro Ori setup. Okay, I will show you Euro Ori. Euro Ori. Non-tradable at this point. A big range here. I think this might go down because I'm sure that I personally am sure. If the price closed below 0.5, below 0.600 on euro dollar, it would go down. So that is why I'm short biased on euro crosses. Ilya is saying that he wants to repeat slides. Okay, guys, 1 or 2 more questions and we are over. I will show you slides again, no problem. GBP carry. Okay, GBP carry here. Again, the price is, you see, it's being supported here. See, and now it's trying to go up. I personally think that unless let's see, this is not looking that good because this could be 1, 2, 3. So unless one of these levels are broken, we cannot say for sure. If this is 1, 2, 3 to the downside, then it could actually come to, if it breaks this level of support, it could get to L4, but I would be paying attention to either break of H4 or break of L3. It's non-tradable also, guys. These pairs, GBP CAD, simply, guys, for me, this is non-tradable now. This is range. I don't like range. I really want to see trends. This is a good trend, so CAD yen, much better, much better, guys. This is ascending scallop here. Very good. I like this, and I would definitely go with a buy on support. Possible buy could come here. Another possible buy could come here. This is very strong support, and you see even there, guys, even there, watch for this order block. So that is why the price is above this zone. So buy on dips, definitely buy on dips. And finally, the last question for today, pound yen. Pound yen setup, inverted head and shoulders emerging. This looks like shoulder, left, head, right. So for me, this is clear. This is the zone to look for should the price drop here. So buy on dips, and if it breaks H5, strong possibility for 143.16. This is okay. This is okay too. So pay attention to dip, buy on dips, and buy on breakout above this. So this was all. Now I will roll the slides again. So I will definitely roll slides. Just give me, okay, this is EMA 89, yes. For all of you who are still wondering which EMA this is EMA 89. Now we need to, okay, roll the slides, yes. Euro dollar, and pay attention to close below 0.600. Pound dollar. Watch for CPI data, guys, tomorrow. Very important. CPI data, very, very important. Please don't take any big risk, but that is why I gave you a bit of space for long and short. Australian dollar. Dollar yen, neglect this. This is already happening. And euro yen. This already happened, guys. So you should have made pips from my analysis today, because sell happened after my analysis. Okay, guys. Camarilla settings for 1 hour are set on daily, unless 1 hour L5 or H5 are overshot, then we set it to weekly. Okay, that was it, guys. I wish you a very pleasant week and many pips as always. So cheers, guys, and trade safe.